Good morning, it's Tuesday the 20th of September and welcome back to our look ahead at the week's key economic highlights brought to you by Atlantic Capital Markets. As always, we'll start with a quick rundown of the key economic numbers being issued this week and we'll then dive into some of the more important stories afterwards with our own thoughts and analysis. So without further ado, let's get straight to it. So the economic numbers being issued this week start today with the release of the minutes from the last RBA meeting and the release of PPIs and CPIs from Germany and Canada respectively. On Wednesday, the Fed makes its latest rate decision, something that we'll discuss straight afterwards. Also on Wednesday, the release of the latest EIA crude oil stockpiles. Thursday is interest rate decision day in Japan, the UK and indeed Switzerland, and we'll give our thoughts on the UK's and Japan's decisions straight afterwards. Thursday, we'll also hear the latest US jobless claims and the Eurozone consumer confidence. On Friday, it's mini budget day here in the UK, as well as the release of the Eurozone's latest flash PMIs, both of which we'll talk about at the end of today's video. And also on Friday, we'll hear the latest global services and manufacturing PMIs and the Canadian retail sales figures. And as for companies that we'll hear trading updates from this week, yesterday, of course, the markets were closed for the funeral of Her Majesty Queen Elizabeth II. But today, retail group Kingfisher released their first half-year results, and today's also the quarterly reshuffle in the FTSE. Both stories we'll discuss straight afterwards. On Wednesday, we'll hear from General Mills and Trip.com. And Thursday sees the release of interim results from both Cineworld and JD Sports, which we'll discuss afterwards. And the day also sees results released from PZ Cussons and Costco. And finally on Friday, we'll hear from Smiths Group. Well, this week is a big week for central bank action. The Federal Reserve, the Bank of England, the Bank of Japan, and indeed the Swiss National Bank, as well as the Central Bank of Norway, are all due to announce interest rate decisions this week. The Fed will decide whether to raise rates by 75 or 100 basis points, and the Bank of England will decide between 50 basis points and 75. So let's take a look at this short week's bigger stories in more detail. The quarterly FTSE reshuffle on Tuesday will see Aberdeen, Hiker Pharmaceuticals and Howden Joinery axe from the FTSE 100. Aberdeen and Hiker trade over 40% lower this year. Meanwhile, pandemic play Howard Joinery has seen demand fall as the economy reopened. Convatec Group, F&C Investment Trust and Harbour Energy will take their place, which has risen 30% over the past year. Home improvements retailer Kingfisher will be up against tough comparisons as they release their half-year results again on Tuesday. In the same quarter the previous year, sales boomed during the lockdown. Same-store sales are expected to fall 3.9% in the first half of the year, falling across all of its brands, which do include B&Q and Screwfix, and across all regions except Poland. Revenue is expected to fall 4.4% to £6.79 billion, and pre-tax profits are forecast to lose more than 28% to £478.9 million. Across the full year, Kingfisher targets profits of £770 million, and that's well down from £945 million the previous year. Investors will be looking for, of course, a reiteration at this level. The Fed is due to make its latest interest rate decision on Wednesday, and last week US inflation fell less than forecast, resulting in investors repositioning to price in more aggressive moves from the Federal Reserve. While inflation fell to 8.3%, this is still over 4 times the Fed's 2% target. And Fed Chair Jerome Powell has been very clear that the Fed will keep hiking rates until the job is done. The data cemented the case for a 75 basis point hike and brought the possibility of a 100 basis point hike to the table. At the time of speaking, the market is pricing in a 21% probability of a 100 basis point hike. With inflation appearing more embedded in the economy than initially thought, the Fed could prepare the market for more jumbo-sized rate hikes heading towards the end of the year. A hawkish Federal Reserve could pull stocks and gold lower and, of course, lift the US dollar. The Bank of England will meet to discuss monetary policy this week after postponing the meeting due to the death of Her Majesty. In the August meeting, the Bank of England hiked rates by 50 basis points, its largest rate hike in 27 years, taking the base rate to 1.75%. Since the last meeting, inflation rose to 10.1% before falling for the first time in a year, dropping to 9.9%. Meanwhile, the economy is sitting on the brink of recession. However, Liz Truss's energy support programme could bring a shift in outlook by the Bank of England, given that it could spark a slowdown in inflation. The Bank of England is expected to hike rates by 50 or 75 basis points. The market is leaning towards the latter, but at the moment, the pound is looking vulnerable against both the US dollar and the euro. A 50 basis point hike could send the pound lower still. Well, it's also interest rate decision day in Japan. And the Bank of Japan rate decision isn't usually a big market moving event, but the Bank of Japan is one of the most dovish major central banks. However, this week has the potential to spark some movement in the yen, given that the Bank of Japan rate was checked last week amidst rising speculation that the central bank could intervene in the FX market. Several Bank of Japan officials have highlighted concerns over the exchange rate after the dollar-yen pair rose to a 24-year high of 145. The Bank of Japan meets after the FOMC, so it does have the luxury of assessing the impact of the Fed's decision on the FX market. 145 appears to be the line in the sand for the Bank of Japan. Also on Thursday, sports retailer JD Sports are due to release their interim results. In July, JD Sports advised that like-for-like sales were up 5% from a year earlier, which has paved a positive tone ahead of this week's interim numbers. Analysts expect a 6.9% rise in revenue to £4.15 billion and a 12% drop in pre-tax profits to £386.2 million. The results come as the share price trades 40% lower year to date. The share price appears to have found a floor around £1, and the government's recently announced energy relief package should shore up the retail sector going forwards. And finally on Thursday, Cineworld are also due to release their interim results. Well, Cineworld's share price, that was worth over 300 pence in 2019, fell below tuppence after the chain revealed that recent admissions were short of expectations as the company filed for Chapter 11 bankruptcy in the US, where over 2/3 of its cinemas are located. Cineworld blamed the slowdown on a limited film slate, although this is rather questionable given that peer AMC Entertainment posted better than expected numbers. Expectations are for revenues of £1.75 billion in H1, and that's up from £292.8 million in lockdown the previous year. Operating profit expected to rise to £307 million, and that's up from a £208.9 million loss. Friday sees the release of the latest flash PMI figures in the Eurozone. Business activity in the Eurozone contracted for a second straight month in August. The composite PMI fell to 48.9 in August. That's down from 49.9 in July. Of course, a figure under 50 indicates that business activity is shrinking. So far, data in the third quarter suggested that the economy contracted in the July-September period, and September's PMI readings could indeed confirm this. The manufacturing sector has seen new orders decline and inventories rise. Meanwhile, services stagnate as consumers rapidly lower spending amid the deepening cost of living crisis. The euro against the US dollar trades just below parity and does indeed look pretty vulnerable. Weak PMI data could pull the euro even lower. And the new Chancellor of the Exchequer, Kwasi Kwarteng, is due to announce a tax-cutting mini-budget at the end of this week, which will set out the economic policies of the new Liz Truss government. Investors will of course be hoping for more details on the recently announced energy relief package, as well as revealing the economic agenda of the party over the coming 2 years. Kwarteng is widely expected to reverse the national insurance increase announced earlier this year, and indeed ditch plans to increase corporation tax next year. This big focus will be on whether there is further support for businesses. So those are the big stories of the week. Let's wrap up with a quick look at the dividend announcements due this week. In the FTSE 100, we'll hear from Hargreaves Lansdown. And in the FTSE 250, we'll hear from Crest, Nicholson Holdings, IG Group, Fidelity European Trust and Essentra. So there you have it. After a very sombre but appropriately splendid day in London yesterday, as Her Majesty was laid to rest, watched by an estimated 4.1 billion people around the world. That's well over half the global population. As we dry our eyes for the rest of this week, economic eyes will be on a busy week for interest rates. So as always, we'll be here at Atlantic Capital Markets giving our expert opinion on events as they happen, so do stay tuned. So as always, thanks for watching, and don't forget to click on that subscribe button to make sure that you don't miss out on our regular financial updates with our expert market analysis and opinions. Also, if you haven't tried it already, why not download our app to your phone or tablet if you do want to keep updated on the latest financial news as well as our award-winning trading signals. So until next time, from all of us here at Atlantic Capital Markets, have yourself a great week.